Quiz time. Do you know what price action is? How about price action trading? In the world of active trading, price action is the name of the game. Give us 5 minutes today and you'll know exactly what price action is, its key concepts, and 3 price action trading strategies.
All right, first things first. Price action is the movement of an asset's price over a given period of time. It represents the ongoing dialogue between buyers and sellers. Simply put, price action is the lifeblood of the markets.
As traders, we need prices to move to create money-making opportunities. Without a movement of price or degree of price action volatility, it's impossible for us to profit in the markets. Okay, so what moves price or generates price action? Price action is caused by an imbalance between buyers and sellers. When this imbalance gets big enough, price reaches a point of equilibrium and moves accordingly. If there are more buyers than sellers, then the price moves up. If there are more sellers than buyers, then price moves down. It really is that easy. Okay, so what is price action trading? Price action trading is a strategy where the trader focuses solely on pricing data. It's a way of trading that involves the analysis of only naked price data. Price action trading involves 2 core assumptions. Number 1, tools and indicators are an absolute waste of time. And number 2, traders behave in roughly the same way regardless of market, time period, or stimulus. In essence, the only thing that matters are price movements themselves. All right, let's head over to the charts and break down the vital concepts of price action trading and 3 key strategies.
All right, let's talk about the 3 market states vital to price action trading. Number 1 is trend. Now remember, a trend is a directional move in price, and that's defined by either being a series of higher highs or a series of higher lows. Trend is easy to spot on really any time frame or any market. Number 2 is consolidation. Consolidation can be a bit trickier to spot. Still, it represents tighter trading conditions, relatively tighter trading conditions, and what it is market indecision. It means that buyers and sellers have fought to a stalemate. Nobody's quite won yet to push price directional in the form of a trend. So consolidation is number 2. Number 3 is chart patterns. Now there are literally dozens and dozens of chart patterns. We've done a lot of work on them in the Trading Academy. Feel free to check that out in the trading room. Number 1 is classic chart patterns. Number 2 are just basic candlestick patterns, such as a doji or a morning star. Number 3 is harmonic, like your ABCD pattern, crab pattern, bat pattern. This is a good illustration of a classic chart pattern. This is a bearish pennant. Price action trading is all about market state. So let's practice finding market state. The first thing we're going to do is get rid of all of our indicators. Now we've got that naked price action we need to truly define what the market's doing. The first thing we want to do is take a look at a trend. Let's work on identifying trends. Remember, trends are easy to spot. You just have to get used to doing it. Number 2 are consolidating markets. We want to find markets that are in consolidation. And number 3, we want to find chart patterns. The more you practice, the easier finding trends, consolidating markets, and chart patterns will be. All right. Let's do it again and again and again. Practice makes perfect. Let's take a look at 3 ways to trade this powerful trading methodology. The first price action trading strategy we're going to go over is a trend following approach. Now, you remember with the trend, you have a directional move in price. Now, we want to buy or sell with the pressure. We want to go with the trend. You always want to follow the trend if at all possible. So how do we do that with price action? We buy or sell on a pullback. Now, right here, here's our example of a bullish trend. It's a series of higher highs and higher lows. What are we looking for? We're looking for an area to buy a pullback. Now, you'll see right here early on in this trend, we have a nice pullback here that really shows us an area of natural support. When we retest that zone, that swing low, that would be our signal to buy on price action. So we would bid this. Your take profit is going to be north of your buy in this situation. Your stop loss is going to be down sort of in this next what I would call value area or swing low. A lot of folks call those order blocks. And the idea here is to stop yourself out if in fact the trend is actually over when it's completed its cycle. So that's one way to do this. Remember, your take profit is going to be a function of how much you're risking with your stop loss. In a trend following approach, I highly recommend a 1-to-2 or a 1-to-3, but at least get a 1-to-1 risk versus reward ratio. The second way, the second price action strategy is from a consolidation market, and this is a breakout trading strategy. A lot of traders love trading breakouts. Personally, I do too. You can see right here, what is it? Tight conditions, signals market indecision, and now we're looking to get in on the new trend before it begins. So right here, we've identified our area of consolidation. We've practiced. We've gotten good at that. Our stop loss is going to be a above that zone. Really relatively simple to place. You just find out exactly where you've got a few highs that come together, and then you're looking to place your stop loss above that level. In this case, you're looking to sell the market, and there's your breakout. You get a nice sell. Your profit target, once again, is going to be beneath price action. In this instance, you're going to want to put that as a function of your risk versus reward with regards to where your stop loss is located. So remember, breakout trades come from consolidating markets. We can either buy or sell the market, but we're getting in on the new trend before it begins. Breakout trading can be very, very profitable. Just remember, extend those risk versus rewards a little bit, 1 to 2, 1 to 3. A lot of breakout traders go 1 to 4 and 1 to 5 on small time frames to keep their risk versus reward and their profitability matrix where it needs to be. Okay, the last way we're going to look at this price action strategies today is chart patterns. Now, chart patterns are a bit more advanced, but they're great ways to trade the market in a structured fashion. The first thing you're going to do with chart patterns is you're going to identify the pattern, and then the second thing you're going to do is execute the pattern either per adopted rules or your own customized rules. Now, we talk a lot about this, trading chart patterns in the How to Trade Trading Academy. Be sure to check it out. Got all sorts of stuff on harmonic, classic, and candlesticks. This is an illustration of a bearish pennant pattern. Now, right there's your bearish trend, okay? We had to identify the retracement, sort of that consolidation period that doesn't necessarily challenge the bearish trend, but it does rotate just a bit north. Now, to execute this trade is relatively straightforward. We're looking to sell beneath the pennant portion of our pattern and get short this market with the prevailing initial bearish trend. You can see our stop loss location is right above that pennant, and your take profit, once again, is going to be beneath price action, with the idea being that you're going to capitalize with your 1 to 2s, 1 to 3s, 1 to 4s. Chart patterns are a little trickier because you have to identify them in the live market, and also your risk versus reward is really going to vary. A lot of chart patterns such as dojis or maybe even morning stars or evening stars really vary from a standard 1-to-1 risk versus reward to those bigger 1 to 2s, 1 to 3s, 1 to 4s. So those are 3 ways, 3 price action trading strategies. Remember, practice makes perfect. Pull up your charts, start looking for these formations, start identifying the tendencies of price action, then go to work.
Right now, price action trading is one of the most popular methodologies out there. Are you interested in becoming a price action trader? Well, remember, practice makes perfect. Spend some time identifying trends, understand what consolidation is, and be able to find a chart pattern on a naked price chart. After a short time, you'll find price action trading becomes second nature. Now, here's a word of warning. Don't ignore your economic calendar. Economic events frequently spike price action. Failure to understand when a market volatility will pick up can be absolutely devastating. Although a professional price action trader doesn't believe fundamentals can actually move price in a meaningful way, nearly all will agree that trading during events such as CPI, the FOMC announcements, or US NFP can be hazardous to their trading accounts. Now, if you're confused, be sure to check out our TST trading framework. It incorporates several tenets of price action trading and is a great jumping off point. If you're ready to begin trading, click the link below and check out a demo account at Switch Markets. As always, I want to thank you for stopping in, and we'll catch you on the next one.